Good morning, everyone, and welcome back to the webinar on the future of work. It's going to be an interesting one. I'm not entirely sure where it's going to go, so really interested in your feedback and questions as we go along. We'll see where we land it. I think we've got some interesting investment thoughts around it, so should be a good chat. We've also put in the bottom right of your screen the PowerPoint slides, which I'll be using today, so you can download them and use them and edit them as you wish. So that's an exciting move forward for us. So nice to have you back. Let's talk about markets, a bit of tech, and then get into the world of work. I'll share a few slides as I go through, as usual. Here we are, features of our working lives. Let's talk about markets first. All right, hope you're all well, by the way. Okay, markets march ever higher. This is the S&P 500. It has breached 4,000, not 3,000, but 4,000. It's now 4,200. It peaked, came off a bit overnight. But obviously markets are very strong everywhere, which is good for us and our clients. The level of what we call the level of fear or nervousness in the market, as measured by the volatility index, the VIX in the States. You can see in March 2020, at the depths of the crisis, the VIX peaked at just over 80. That's pretty much what it got to in the global financial crisis as well. So market very nervous at the bottom. And right now, the VIX is at not all-time lows, but a 13-month low. What is that? Just below 20. It's trading about 18 at the moment. It tends to get down to about 12 when people are very complacent. But there's a lot of positiveness, therefore, in the market at the moment. And let's look at what's going behind that. It's worth having a good look at this chart, which shows you on the left earnings per share, so profits in the market, and on the right the price earnings ratio. This is from Citigroup. It's actually the all country world index, so this is the whole world. And on the left, the kind of snail lines are the progression of earnings forecasts from analysts through a year. So take 2015, for example, in brown, they start off at about 120, just below, as a level of earnings. And as the year goes on, the forecasts tend to come down because analysts tend to be a little bit too optimistic opening the year. So they tend to come down over time and then kind of end the year where earnings turned out for that year. And you can see 2019, the same kind of thing, around 150, came down to about 130. 2020, of course, collapsed. So earnings forecast came down to 110, stabilized at about 115. So well down clearly on 2019, which is what we would have expected. And then the interesting bit is, how far they have bounced. The recovery in earnings has been pronounced. 2021 and 2022, you can see those snail trails they're above 2019. So the year we're in and into next year, we're going to see better profits than when we went into the crisis. So that's a very strong recovery from corporates. Partly vaccine-led, partly cost control-led. A lot of that has been factored into markets, which you can see on the right hand of this chart is the price earnings ratio, which is the main valuation of the market. The red line is kind of the average. The world tends to trade at about 15 times earnings over time. Obviously moves a lot around that. You can see it peaked. Actually, you can see there that the tech bubble, 1999, around 25 times. Got down to 9 times depths of the global financial crisis in 2008. And going into COVID, it was trading on about 13 times. So fine, pretty good value. You can see how it's spiked up, partly earnings going down, and partly now the market going up. And it's currently trading that's got it at 19 times, call it 19, 20 times earnings. So fairly expensive. So lots been priced in terms of the recovery of earnings we're expecting. And some fearful things on the horizon. I've talked a lot about inflation, the possibility of inflation coming through. There's a chart that shows you the producer price index, the PPI, compared to the CPI, which is consumer price inflation. The PPI are the input costs. They tend to lead the consumer price index. You can see how that's spiked. So we are expecting a lot more inflation to come through fairly quickly now. The Fed is being very clear it will be transitory. I don't know. We'll see. That is a risk for the market, I would say. And we are getting bubbles all over the place. This happens to be lumber. So the price of wood timber in the States has gone from, what is that, 400 to, it's actually 1,500 as we talk today. So that's gone up almost fourfold as we've recovered, which is partly a lack of wood and partly a lot of house building in the States as the market recovers. And we're seeing that in computer chips. We're seeing it in container shipping. As the world recovers and supply chains are still quite constrained, you're seeing these bottlenecks in the system. It's coming through in very much higher prices, which tells you there's a lot of demand, but it also tells you supply is struggling to keep up, which means we're going to get pricing going up, coming through into at the consumer end. So as the price of lumber goes up, it tends to get passed through into house prices. And Warren Buffett the other day said, in his businesses just this week, there's inflation everywhere. And he is also worried about inflation. One final bubble, an extraordinary thing where a single store, this was flagged by David Einhorn, a quite famous hedge fund manager in the States, a single store in America with sales of $35,000 is trading at $100 million in the stock market. Turns out to be true. So there's a little bit of craziness going on where retail punters just kind of pump these things up. And I thought this chart was quite interesting, a little bit on the side, but also the extent to which asset inflation is in the system already. Okay, these are 10-year growth rates, in particular, I call them real assets or non-correlated assets, art, classic cars, watches, wine. You can see rare whiskey up 478% over the last 10 years. People have discovered rare whiskey, well done, Scotland and Japan for that matter. Classic cars, I think we know about, those have doubled, 193%, in fact, they tripled. Wine has doubled over the last 10 years, art has done very well, etc. So maybe you call those bubbles too. They've been very strong. And our own old favorite, before I get on to the next section, Bitcoin, cryptocurrencies. This shows you how quickly and how far Bitcoin has risen. So this is the red line is Bitcoin. Since it first started going up, came back, went up, came back, gone up again. Compared to previous kind of recent great bubbles. So gold, Japan in the 1980s, the NASDAQ in the 1999 boom are the other lines. So you can see the extent to which Bitcoin's gone absolutely mental. And in the near term, I think that is a bit of a problem. And I suspect, as I said last time, it will come back, but is a long-term interesting opportunity nonetheless in crypto. But in the near term, yeah, we're in kind of definitely a bubble phase in Bitcoin and other altcoins. And you can see the extent of this, just around the point home, in terms of Bitcoin and the other main cryptocurrencies. Bitcoin followed by Ethereum. I flagged Ethereum as being very interesting last time and last year. It is now catching up very quickly to Bitcoin. So you can see it's $300 billion in market cap. This is out of date. It's a bit higher than that now. It's probably 400 billion market cap as we speak. Bitcoin's just over $1 trillion. Just down there, you can see Dogecoin, which is the joke cryptocurrency I talked about before, which is now capitalized at about $40 billion. That is craziness because it has no utility whatsoever. But there are cryptocurrency coins there with some efficacy. So within that, there are some interesting things, including particularly Ethereum, but have gone up a lot in a very short space of time. And you can see how they've caught up with gold. Again, I flagged this last time. Gold is about $10 trillion market cap at the top there. Cryptocurrencies in total are about 2 trillion. So Bitcoin $1 trillion plus the others $1 trillion. So as a store of value, you could argue they got more upside, and you could argue that they're a bit more flaky than gold. Gold is an absolute store of value, proven over many, many years, whereas Bitcoin's very new, so a big discount. But anyway, it's caught up quite a lot. And a couple more slides on Bitcoin craziness. This is a slide someone sent me from Miami International Airport. That is a bit stop where I assume you can buy Bitcoin out of that vending machine. That's the extent to which it's become a little crazy. And this is a photograph which I hadn't seen before, which I found extraordinary. This is a Bitcoin mining farm. And just look at the scale of this. Look at the two gentlemen, I assume, kind of in the middle bottom there. Wow, look at the size of that thing. And these things are, all over the place, particularly in China. 75% of these things are mined in China. and the electricity consumption is off the charts. And here is a chart about the electricity consumption of Bitcoin, let alone the other coins. And I found this very interesting. If you look at the left, annual electricity consumption of the UK, where I'm from, 300 terawatts per annum. Sorry, terawatt hours per annum. 300. That's the whole of the UK. A pretty large economy. I think it's probably the 6th largest economy in the world. Bitcoin, 150 terawatt hours. It takes half the electricity of the UK to mine Bitcoin right now. I don't know. That can't be good. And I think people are going to jump on that and say this is really not a good idea. So risks around Bitcoin, and we're seeing a number of countries banning Bitcoin already, either for banking purposes or trading purposes or both. Most of these are what you'd call, dare I say it, third world countries, but I think the developed countries could well follow. You know, you're seeing some murmurings out of the States and out of Europe on this. That would be, a big problem for crypto clearly. And just one last one, I think it's the last one on this. Just have a look at this. There is a problem with Bitcoin. Bitcoin as a means of exchange, as a means of buying things. It's a problem because if you look at the left-hand chart, Bitcoin transactions per second, if you're actually using it as money, what's that? 4 per second. Visa transacts 20,000 transactions per second. Bitcoin does 4. So that's a problem if you're really going to use it in everyday use. It usually takes about half an hour to clear. So that's not helpful. May increase, of course, but then the cost per you can see the cost per transaction as well. You can see that a cost per Bitcoin transaction is $60. It's actually come down to 30, but it's all over the place. Let's say it's 30. $30 per transaction. So every day, waste of time. If you're buying a Tesla car, fine. However, if you buy a Tesla car from me, and Bitcoin's at 55,000 a Bitcoin, and it probably goes down to $30,000 per Bitcoin, I'm not going to be very happy with my Bitcoin, and I'm never going to use it again. So as a means of exchange, yeah, not sure. As a store of value, possibly. And finally, central banks are planning digital currencies. So central bank digital currencies are going to be everywhere very quickly, and those will operate on the blockchain. So blockchain is real and revolutionary, and central banks will jump on it and will supersede cryptocurrencies. They'll have a part to play, crypto, but central banks will control this blockchain story going forward. Alrighty, enough on crypto. Let's move on. Just a few minutes on tech. I've always got Elon Musk. Here he is again. Neuralink could implant chips into human brains later this year. People are already lining up for this. People have volunteered to have the chip into their skull. It gets surgically implanted, and it connects your skull to your brain to ultimately the World Wide Web. So this is happening, can you believe it, this year, from monkeys to humans within a few months. Beijing, it's happening. Driverless cars. These are ride-hailing services with no drivers involved. They are launching this week in Beijing. It's happening. It's going to be happening probably not here soon, but certainly in the States very soon. And it's already being trialed, of course, in places like Phoenix. Space. I find this interesting. NASA has managed to extract breathable oxygen on Mars from the CO2. Yeah, can you believe it? So, yeah, Elon Musk will take us there. There will be space stations on Mars, and we will breathe oxygen. An extraordinary thing. And the moon's going to get 4G. So we've got 5G coming here. We're going to get 4G on the moon in the Lunar Space Station. And I think finally, China is really racing ahead in the space race now. They will be building their first permanent space station. That is happening. The launches are happening now. And that will be a competitor to the International Space Station. It's just China. So they are winning the race at the moment, and the US is struggling to keep up. All right, 2:15, perfect timing. We're now going to get into into the world of work. So I'll keep on sharing slides for now, I think. So I've approached this in I guess a couple of ways. Number one is, what are the existing trends in the workplace. And by the way, this isn't a post-COVID, we're going to be 3 days a week kind of a thing. I think that's a little bit too simple. I've approached it in terms of what are the existing trends in the world of work? What has COVID done to accelerate them? And then ultimately, what's going to change fundamentally in our lives? So that's the killer slide at the end. So you've got to wait till the very end for the punchline. Existing trends. Okay, we're more reliant on technology. That was happening anyway. That has accelerated. We're moving to a virtual world. We're talking the virtual world now. Holograms will be with us later this year. We will talk to each other, hologram to hologram. Certainly be trialed later this year, probably next year before it actually happens. Remote working yields opportunities. I'll come back to that. So remote working means everyone's on a level playing field in terms of location. So there's a massive opportunity in terms of the developing world. That's one of the biggest changes, I think. We'll come back to that. Task-based working. Again, was this really happening? It kind of was happening in terms of the gig economy. I think that's going to accelerate. And I'll come back to that in terms of paid per task as opposed to paid a wage. We've got an opening now for human replacing machines. Will machines take over faster? Again, it was happening. That's accelerating. I'll come back onto that. And more autonomous vehicles. I'll come back onto that. And that was happening anyway. But in terms of people being not commuting as such, when they do commute, they're going to want to be in a comfortable working environment where they don't have to drive. So that's going to change things quite a lot. But let's get into the trends in the workplace anyway, from an economic point of view. And we're going to talk really about productivity and technology and how much that will change the world of work for the better or the worse. So let's take a look at some of the main trends in the workplace over the last, few decades. Okay, this goes back to 1870. Number one, people are working shorter hours. I know it doesn't always feel like it, but it is true. From what is that, 60-hour working weeks down to 40-hour working weeks, basically over the last century. So we're fortunate in the sense that we've got a shorter working week. That is happening. Number two, more of us are retiring younger. This is a chart which shows the percentage of over 65s who participate in the labor force. So you've gone from 80% over 65s are working in the 1880s to, 20% of us work beyond the age of 65. So people are retiring younger. And people have therefore more leisure time, a lot more leisure time. You know, look at this, 1965, 30 odd hours a week. Right now, 40 odd hours a week. You know, that's a big increase in our leisure time. And our leisure time is more productive because we're spending a lot less time doing chores. Interesting chart. Here we go. 1890 through. Percentage of households who have a refrigerator, 100%. Vacuum cleaner, 100%. Stove, 80%. Washing machine, 100%. Dishwasher, 70%. This is the US, by the way. Electricity, 100%. Housework, 60% down to 25%. So our leisure time is a lot more enjoyable than it used to be, and we've got more of it. And people are therefore happier. This is all good stuff, by the way. We always think things are not so great, but things are as good as they have ever been. Life is exciting, and people are very happy. This is, what is that? 55% agreeing that life is exciting right now in the States. That's pretty cool. And that's getting better and better. This shows you, in the States, sorry, it's mostly US data, completely or somewhat satisfied with your job. 90%, that red line, 90% of people are satisfied with their job. Amazing. The recognition you receive at work, 80% happy. The amount of money you earn, them, black line, almost 80% people are happy. And your chances of promotion has gone up quite a lot in the last decade, from 60% to 70% happy. And that has accelerated through the lockdown. People are happier in their jobs today than they were a year ago, and they're more satisfied in their job. It's amazing. And they're more engaged, strangely, with their co-workers and their boss, because people are making an effort to communicate with each other. It's all a bit counterintuitive, but turns out to be true. And I like this chart. So happy workplace, happy hours, all good. And world GDP, of course, has gone crazy. This is from the year 1 to the year today. Thank you, Steven Pinker, for the chart. World GDP has gone from nothing, give or take, to $110 trillion. Happy days. And more importantly, GDP per capita. So people are getting wealthier as well as working less. GDP per capita has gone up a lot. US, of course, has led it, followed by the UK, let us say, South Korea, look at that catch up. So people are happier and wealthier. Poverty has become a very small part of people's lives. Again, it sometimes doesn't feel like that. And of course, some people are in desperate straits, but as a proportion of the population, it is at historic lows. It's come down from 90% in extreme poverty, which is less than $1 a day, to 10% today. Okay, that's a good thing overall. And life expectancy is up. People are living a lot longer. And look how that took off in the 1920s, 1930s. I suspect that was penicillin, actually. And it's gone up from an average life expectancy in World War I time of, what is that, 35, 40 years old, to 80 years old, less than a century later. It's unbelievable progress. So people are living longer and better, much better lives. And finally, inequality is down. This will surprise me. We all worry inequality is going up. But because the poor are catching up so fast, and the rich, it's a very, very small amount of the rich are getting much richer. So the poor are catching up with the middle class quicker than the middle class is moving up. Inequality, according to the Gini coefficient, globally, population weighted, has come down appreciably over the last 30 years. Again, that's good news. We heard a lot of bad news. So there's a lot of good news in terms of the underlying trends in the labour market and our lives. And finally, global well-being. This is a well-being composite, which is measured, I think, every year. And it has gone up from, what is that, minus 0.5 to plus 1. Extraordinary progression over the last century. But there is a problem. All these shorter hours, all this leisure time, all this happy days has meant, amongst other things, that productivity, labour market productivity, has collapsed. That's where the rubber's hitting the road a little bit. Because if you're not more productive, you can't keep GDP going. Which is why they're having to throw so much debt at the market to keep GDP going. Big problem. Take a look at this chart. Labour productivity. You can see the Japanese economic miracle, 1970s and then into the 1980s bull market in Japan. Everyone wanted to be Japan. Their productivity was off the chart. Germany, the economic miracle of the early 90s. Again, people wanted to be Germany. That's come down. And you can see it's all converged on, give or take, naught. So productivity at naught is not helpful for GDP growth. So the question is, can the shift to home working, I'm going to make a shift to home working, not for everyone, but for those who do it, and some will be hybrid and some will be full-time, but a shift to home working, can that improve productivity? And there's a couple of things. One is technology. Let's take a slide break here. Give you a bit of slide fatigue. One is technology. And in the States, technology spend was 25% up year on year over the last year. So massive spend on technology, this kind of thing. Can that make us more productive? Can this big technology shift make us more productive? My hunch is yes, but we'll come on to that. And secondly, what does the work from home environment mean in terms of those previous trends we looked at, in terms of working hours, etc.? So that's the exam questions. Let's look at those two things. Okay, the same chart in terms of shorter hours. This is weekly work hours, the same thing, down from whatever I said, 60 to 40 working weeks. Western Europe and the States. And you can kind of see how that's kind of stabilized and it's kind of edging up. And I think we've all felt that we're working longer hours because we're at home. I think that'll settle into a fact. And it'll settle into a fact more than anything because you take out commuting time. And therefore our productive work hours have gone up. And that work from home element is going to have a higher working hour per week element to it. I would say. And that is a good thing for overall labour market productivity. Not so great for us, we'll have less leisure time, but we are at home, so we're lucky to be so. So that's point number one. Point number two, this is the same chart on retirement age, percentage of men over 65 participating in the labour force. You can see again how that's turning. So more people are working beyond the age of 65. And this comes back to the life expectancy chart, because people are living longer, they're fitter, their health is better, and they're more able to work beyond 65, and they kind of have to, because they're living for such a long time. They haven't got enough savings. So there's a necessity to working longer, there's an ability to work longer. And companies want people who are older to work longer. So, the kind of arcane retirement age thing, I think, is going to go away, partly because pension fund systems are under so much pressure as well. They can't afford to fund all these old people. So people will work to an older age, to the point which they're older. Again, that will add to the overall stock of labour productivity in the market. So again, that's a positive in terms of the productivity curve. So my contention on that is that productivity will improve through technology and from the work from home trend, and that would be supportive of long-term GDP growth. And that'll turn something which has been 0 to 1% for the last 2 decades. All right, next thing. Remote working and the leveling of the playing field by location. So this is about the gig economy, it's about the crowdsourcing economy, it's about having a person in India do your PowerPoint presentation for your next pitch, because you crowdsourced out and you bid on it, and he or she won the auction, does your PowerPoint pitch, sends it back, you're done. Massive growth in that, and that is going to accelerate as a result of what we're going through. This is a chart which shows you increased technological capability. It's actually well out of date now. I mean, internet penetration, obviously, in those ones below are much higher today and increasing. So, and particularly as our dear friend Elon Musk puts his Starlink satellites into space, which are happening, and you're getting internet connections now from Starlink, 20,000 satellites into space, which gives internet connection to developing countries. Although I read a person from Ireland the other day commending Elon Musk in terms of his internet connection from Starlink. So internet capability will bring people into this new economy in the developing world. And in the developing world and everywhere else, people are smarter. This is a really interesting chart. The gain in IQ points from a base level. Africa, Australia, New Zealand, Americas, Asia. Look at that chart on Asia. How much smarter people are in Asia now than they were 50 years ago. So people are smarter, or maybe people are just realizing people are smart in developing markets. And they're better educated. So this is an extraordinary chart. Percentage of adults with basic education. Sub-Saharan Africa has gone from nothing, again in the 1920s, to 60% today. Asia's gone from 20% to 80%. Eastern Europe from 30%, look at that dotted line, to 100%. So this whole cohort of labor sitting in developing markets, which is most of the world, have the capability to enter the workforce, both in terms of the way they're educated, how smart they are, and then internet connection. And no more so than Africa. This is a very well-known chart by now. The number of countries you can fit, of course, into Africa. I look at this now and again because I'm constantly amazed. China, India, America, Eastern Europe, most of Western Europe, and Great Britain. I think that's Madagascar. And Japan. So the scale of Africa is enormous. We know that. The scale of the people is enormous. And being able to plug them into a virtual worker economy is just one of the greatest shifts we're going to see, I would say, in the next decade. And incredibly positive for all emerging markets. Okay, point number 3. Point number 3 would be less moving around, less commuting, less traveling Joburg and back for one meeting. Crazy thing to do. We would never dream of doing that now. Less international travel. Again, virtual world holograms are going to transform that. So less pollution. That's simply going to be a fact, and that is extremely good news in terms of the fight for climate change. And I think, as a little bit of an aside, the people's awareness of this issue and the kind of wellness issue and the wellness of the world issue is going to mean that the shift to renewables is probably going to happen quicker, just because the kind of force of public opinion is that way, and it's happening already. That will accelerate. So keep your eye on renewable opportunities. That's going to be just explode. But less travel also means fewer road deaths. So that was happening already. Thank goodness, cars are safer. They career into fewer pedestrians. They hurt each other less. There are obviously safety belts and airbags, etc. So fewer people die. So that was happening already. However, and this is the number of deaths per 100 million vehicle miles. Okay, down a lot, yes, but still it's the #1 killer globally. I think I'm right in saying that still. 1.6 million people a year die in car accidents. So less moving around is going to help that a lot. More autonomous vehicles is going to help that a lot, because they're much better at driving than we are. So that number will collapse, and that is de facto a good thing. And I think my final chart on this, before we kind of land on the killer slide, is this one. And while you're digesting it, this is the last trend. This is the opportunity for machines to replace humans. We've kind of opened an opportunity here, because we're kind of a little bit stepping back. And does AI and robotics come in and replace all our jobs? That's a constant fear, and it's been the constant fear since almost the dawn of man, or certainly the dawn of the technological or the industrial revolution. And it's a chart which shows you agricultural jobs in the States as a proportion of the total workforce. So in 1800, 90% of people in America worked on farms. 90%. Today, of course, it's 1.7%. Now, the remaining 88.3% became gainfully employed. But at the time, people were being so scared that machines, etc., would replace all the agriculture jobs. And I've got a cat joining me, so forgive me. I will try and do it with the cat, because there's no way you can keep a cat off screen once he wants to be on screen. So this machine replacing humans thing is going to happen, but humans will get different kinds of jobs. And be it designing AI capabilities for human companionship, or whatever it is, there'll be jobs we haven't even thought of. And interestingly, we haven't really seen a big shift to machines yet in even the States, where robotic imports are down 3% last year. And if you think about the three great kind of machine-led economies, Japan, Singapore, and South Korea, they have record low unemployment. They're fully employed. So people work with machines. So that trend will happen, but it'll be less difficult, I would say, for us in terms of a transition. All right, with the cat flailing around, I'm going to take some questions. Please have them come in. We've got 10 minutes left. And I think this is my last slide. Yes, the killer slide. Here we go. All right, there's quite a lot here. It's partly picking up the things I've said already, and a little bit of new stuff. Okay, what changes? Hiring people. I think it'll be more cognitive-based, more task-led, and more temporary. I think we may find, the world of a steady employment, steady wage thing, and you do your best, kind of goes. It'll be more task-based, you get paid per task. It'll be more cognitive-based, because what can you offer to me as a human in terms of solving my task problems? As opposed to, I've been to this college and I've been to that college and I'm educated in that. So it's already happening. Someone was telling me the other day that people are going to blind CV hiring. So simply cognitive testing, using an AI function, cognitive testing, and ignoring people's CVs, partly because that's discriminating against people who haven't had the same educational opportunity. That's interesting. Working relationship. How often have you met with your boss, if you haven't in the last year, in person? I think I've done it twice in a year. That's a different relationship with your boss. So your working relationships are changing fundamentally, and how do you manage that in your virtual world? And aligned to that is teamwork. There's less opportunity for day-to-day teamwork. We're not together. Will we ever be together in the same way we were if it's a hybrid model? less collaboration, but more thinking time. I think people are getting more, I'm certainly getting more thinking time. And for me, it's more creativity. Other people might be less because they depend more on that team environment. Not to say I don't, but within that team environment, you tend to get more creativity, more collaboration, more interesting ideas coming out. But it's going to be less of that. So that's an interesting feature, which I think will be permanent. We're going to get a more competitive global workplace. This is the issue about all these developing economy workers coming into the market with that opportunity. It's going to get more competitive. It's going to be global. It's going to be cognitive based. Who can do this task for me quickest and cheapest and best? And that will actually push down wages. So that'll keep a lid on inflation. So I'm a bear of inflation, but this will tend to keep a kind of a systematic lid on inflation for the next decade. And that's the opportunity for developing economy workers, which is the next point, which I've covered, which I think may be the most important point. People shifting from cities to suburbs and also to different countries. We're seeing here in the Cape an enormous number of people moving from the UK permanently to Cape Town, where they can enjoy a wonderful lifestyle, they can remote work, they can have a much cheaper lifestyle and better quality lifestyle, and there's a lot of demand for housing around here right now. Prices are going up. So, pricing shift from cities to elsewhere. Less regular income, I've covered that. More task-based meritocracy. Again, that's a fundamental shift for us. More coffee shops and potentially work pods. People are going to be fed up sitting at home. You sit in a coffee shop, you go have a break. I would buy coffee shops right now. I'll come on to the investment piece in a second. Less commuting, less traveling, less pollution. De facto a good thing. And in terms of investment, coffee chains, autonomous vehicles, going to do very well. Property outside cities is going to continue to do very well. Renewables, I think you're just going to explode now. The gig economy, the sharing economy, in terms of putting work out to workers who can do it expeditiously in a remote area. Emerging markets as a block, I think systematically going to do much better because of this participation in the global economy. Smaller companies are probably going to do better because they have access to a larger pool of demand in terms of a virtual world. So small companies can scale faster, they can scale more globally. That's going to keep on happening. Probably less inflation than might otherwise be the case. And if you can buy a home office designer, I would do that because people are going to continue building out their homes in that kind of a way. So I'll sum up in a second, but I'll take a couple of questions. What effect is COVID going to have on world economies going forward? How long will it last? So COVID, it's a response to COVID, which I think is so interesting in terms of the way we're working and conducting our lives now. And once COVID is a thing of the past, which let's say it will be in a year's time, let's say the world gets vaccinated by the end of 2022. Let's say that happens. I suspect that'll be okay in terms of the timeline. End of 2022, and it is kind of over. It's the lingering effects, which I've talked about, which are going to be the big deal. And those will, I think, be permanent and mostly good. But it'll be a new way of working. And I'll come back onto the summary of that in a second. There's a question on inequality, which is on a different stream. And I think it's a good point. Will inequality increase? And I think it actually probably will, from a social inequality point of view. Because what I've talked about is those people like us looking at the screen who are lucky enough to be able to work at home comfortably and have that connection and have that capability, have the type of job, more importantly, that you can do that. And the good jobs tend to be work at home, the ones you can work from home. They're intellectual jobs as opposed to essential workers who don't benefit from this. So that social split, I think, will be something which is troublesome and accentuated and potentially permanent. Okay, I'm going to sum up, and I think I've got kind of 4 things outside of this what changes thing, which is a little bit more detail within. I think broadly, the permanent changes will be a good thing. Productivity will likely improve through technological innovation and longer hours and a longer working life, I think in a good way and a more comfortable way. Remote working will drive innovation and participation in the developing world from people who haven't been able to participate before. That's going to be a massive change. And emerging markets will do much better, and the people in them will do much better as a result. Thirdly, less travel, less moving around, more awareness of renewables. Renewables will do very well, and that'll accelerate. And and AI will increasingly take our place in certain aspects, but we will shift quite happily to different tasks within this new economy, but it will be a transition. But overall, the COVID, however awful it has been for many people, it's allowed the economy to pivot and accelerate and work in a different way, and in a different way permanently, which I think actually de facto will be a very good thing. So there's a lot of positive news coming out of this in my mind. Okay, that's it. Thank you very much indeed. Lovely to see you. And I'll see you for the next time. Bye-bye.